Right, good afternoon, everybody, and welcome to our weekly webinar. The clock has struck noon here in our Cape Town studio, and we certainly are thrilled to have you all join us here today for our live investment event and webinar. It's brought to you by Real Estate Investor. I'm Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor, South Africa's leading independent platform for real estate content, education, and news since 2007. And I'm excited to be your host and moderator for today's webinar for what promises always to be a valuable session. And at REI, we're dedicated to supporting you, the South African real estate investor, the real estate service industry, the property business community through our digital platform, rei.co.za, our monthly digital magazine, Real Estate Investor Mag, and our investor webinars, seminars, and live investor events. And today we hope to elevate that experience. So before I introduce you to our specialist guest panelists and dive in today's area of discussion, how affordable housing transforms communities and fuels the economy, first some housekeeping. So if you've registered for today's webinar, we will send you a recording. We get that request quite a lot in terms of the recording via email after the event. And for those of you who haven't registered yet, you can find the recording on the homepage of the rei.co.za website under the events and webinar section. So we encourage you all to engage actively and to ask questions throughout the webinar. Please submit your questions in the Q&A box located at the bottom right of your screen. The chat box is reserved for general comments. So without further ado, our topic for today, unlocking economic growth through property, how affordable housing transforms communities and fuels the economy. And we know that affordable housing represents possibly one of the most significant public-private partnerships initiatives. It offers immense value to transform communities and stimulate economic growth. And we've already heard that Finance Minister Enoch Godongwana has doubled down on budget cuts. He's put in place measures to stimulate growth. And amongst these is a plan to reduce the size of the public service through incentivizing early retirement and a lot of other reforms, including a new credit guarantee vehicle, which will encourage private sector investment in public infrastructure. Coupled with that, we have a positive sentiment. And we saw that yesterday at the 16th annual IHS Affordable Housing Conference, which in fact, we've got one of the sponsors here, Nedbank Corporate and Investment Banking CIB, Nedbank CIB. And so we're going to explore that whole landscape today, as we did yesterday, to see what are the new challenges, what are the opportunities. And so we're going to look at inclusive policies, impactful community initiatives, sustainable development, and also financing initiatives. So without further ado, let's get started. Let me introduce you to our distinguished guest panelists today. First up is Rob Wesselaar. He's the Managing Director of International Housing Solutions. Rob, do you want to just introduce yourself to the audience, please?
Yes, hi everybody. As Neil said, it's Rob Wesselaar. I'm the MD of International Housing Solutions. We're a private equity, affordable housing property investor and manager. We own and we have developed about 31,000 affordable housing units over the last 14 years, and we currently own and manage about 12,000 units. We're active in South Africa, Namibia, Botswana, and Kenya. Great to be here. Thanks, Neil.
Great stuff. Great having you on, Rob. And I think what a great event it was yesterday. I think congratulations on that. It was really a great discussion, and also it's supported by Nedbank. Kayise Mashafani, he's the CIB Property Finance Executive. Kayise, introduce yourself to the audience.
Thanks, Neil, and for inviting myself through here. So I look after what we call residential property finance division within the CIB in Nedbank. So what we technically do, we provide, let's say, funding to developers who participate in development of conventional residential properties. That also includes social housing, affordable housing, retirement villages. And now we've already expanded further in terms of looking into what we call backyard dwelling. So we provide, let's say, senior debt funding to the participants in the residential space.
Wonderful. Great having you here, Kayise. And then last but not least, we've got Jacques Tron. He's a former lawyer turned PropTech entrepreneur, and he empowers South Africans to achieve home ownership and financial security through innovative, accessible solutions through his product, MyBondFiscus. Welcome to you, Jacques.
Hi everyone. So basically our background, as Neil so quickly summarized, we've built a couple of platforms that looks after consumers in this space. And from looking at the data, we get some interesting insights into how big a change something as simple as just a property can make. We've involved with both public and private sector businesses like Anise and Rob, where we help with the implementation and understanding in conjunction with Meyer de Waal. I'm actually just the stand-in for Meyer, so myself and Meyer has been working together for the last 6 years. And we've got a couple of innovative projects in this sort of environment where we can show direct impact with real-world data. So it would be interesting to give everyone a quick view of in small and micro sort of communities, what a big difference it can make.
Okay, wonderful having you, Jacques. And as you know, Professor Francois Verrilli says, he's a professor of Department of Construction of UCT, was it Wits, and he says that obviously the sweet spot is R1 million. That's the property in South Africa. That's the market. That's where everything is. And I see Kayise nodding sagely over there. But Rob, let's start unpacking this affordable space. Let's first define it. What is affordable housing? And then let's look at what role does affordable housing play in addressing the current housing backlog in South Africa. Now, I know you guys you started off in South Africa. That's your stronghold, obviously. But you've also moved to Kenya, to Nairobi. So maybe just tell us about what is affordable, how do you define it, and sort of take it from there.
Yeah, thanks, Neil. Luckily in South Africa, we actually get help when it comes to what the definition of affordable housing is, and we have the Financial Services Charter, which from the banking environment, initially created to encourage, or actually, let's be honest about it, to force banks to come into a market that 15 or 20 years ago they weren't so ready to come into. So the FSC gives us the numbers, and it fits pretty well into Francois's definition, but a little bit lower. Sort of, we tend to operate in the market of somewhere between 500 and 850, 900,000 rand a unit. That's if we're selling the properties. If we're renting them, our sweet spot is to rent to a market that's renting from between 5,000 and 8,000 rand a month. Interestingly, it's quite similar in Namibia and Botswana and Kenya. The sweet spot is the same. The area where there's the most shortage is the same. And what's quite interesting, and I'm sure Kayise will back this up, it's also an area of the market where people are the best payers. So both from I'm assuming from a mortgage bond point of view, but certainly from a rental point of view, the best payers are in that 5,000 to 8,000 rand a month level. Interestingly, the worst payers are in the 25,000 and above. So that's statistic. So we operate in that environment, and it's quite similar in the other countries in Africa that we're operating. But in South Africa, it's an area where there's a huge amount of need. There weren't a lot of operators 10 or 15 years ago. I mean, that space has filled up quite nicely, and we see that as a good thing. Because the market is big enough for everybody and there's enough of a need. And it's what we call the double bottom line. We think you can make money in that space, but you're also serving a purpose. We kind of start where the government stops. So when you look at housing subsidies and interestingly, from a rental point of view, the SHA product, which we have in South Africa, where you can get capital subsidies from the Social Housing Regulatory Authority, makes us able to provide really affordable rentals to people below that LSM level. So, honestly, people earning 1.5 to 6,000 Rand can rent really affordably in a typical townhouse, very much like the other townhouses that we build in the affordable market. So that has a very, very high impact. I think it's one of the products that the Human Settlements Department still runs really well on. The SHRA is particularly currently really well run, and it's an area that works. And when we talk about SHRA subsidies, essentially they give you a capital subsidy for about 2/3 of the cost of the capital cost of your building. And then it's on condition that you're renting within those brackets. So, we have examples of staff of our own that moved from tin shacks into lovely 2-bedroom apartments for the same money that they were paying to stay in the shack. So it's a good story.
Absolutely. No, it is. I mean, isn't that a wonderful, let's get everybody out of shacks, let's get them housed. So, you said, I mean, you mentioned right at the outset, you're into sociable, affordable. I mean, you identified that market sector and obviously from a finance point of view. So maybe just tell us, what led you to really say, let's put Nedbank behind this initiative. And I know you've got all kind of like the green residential development bond and there's other broader finance green. So maybe what is critically important for the success of financing affordable housing?
Okay. Let's, and I just want to step back and then reiterate from where Rob has just stated. This market is very, very important for us. From a banking perspective, because it plays directly into our value proposition is for us to use our financial expertise to do good for the societies. So what is more important for us is the housing backlog is more prevalent in the affordable housing market. And this market predominantly caters for the largest tax-based contributors, which is your low to middle class income. And as everybody stated, it's about 29,000 and below per month. So it's only befitting that we need to enable and provide a funding into this sector, since it caters for such an important market for us. So, and previously this was an underserved type of market, okay? So housing or affordable housing as such, from our side, it provides a dignity. And if it's located to, let's say, the correct amenities, it supports, obviously, the economic infrastructure, it supports the economic, it benefits economically to the buyers and the renters out there. So it's quite a very instrumental for a market for us. And again, we need to alleviate the backlog, which we find ourselves in housing, and that is the sweet spot for us to be able to participate.
Okay, wonderful. So, Jacques, your approach is slightly different. I mean, you are looking at the individual. You're trying to house individuals, and you're trying to make them financially fit, as you call it. So take us through that process, what you're doing in that affordable space.
So I think once again, my co-panelist, the demand is there, but what that demand looks like specifically and how to meet that demand is critically influenced by the individual that's going to purchase a property in that segment. And I sort of sometimes say it's very much like currently walking into a doctor's office and the doctor looking at you and he's saying, you're a Panado client. And that's sort of how we approach financial products in South Africa. It's more based on the sales side, on the product side, instead of diagnosing and finding out exactly what someone's financial life or housing need would look like. Because the person himself doesn't actually know what he can afford, where he should be buying, what's a good investment, what the terms in the property cycle is like. And through that empowerment, you're actually giving him the options to make the choice into the getting the right property so that it does transform communities. So what our platform does, it diagnoses your current financial status and then plots a roadmap towards achieving that goal that you want to achieve, and that's physically achievable. I think sometimes a lot of people have an idea of where they want to go, but they don't have a method or a methodology to get there. And we've developed a platform for any segment, any someone that's in any level of literacy, digital literacy. It can be delivered by text, but we then gather that information, we empower him with that information, and we then connect him to the role players that can either provide him with the property or the finance or anything that would make sense. And then if that diagnosis is in a space where a traditional financier might not be liking his profile as much, we try to fix that. We try to fix that budget and to fix that property buying wallet into something that he can get towards that goal.
So your role is also very much educational, because as you say, a lot of the people don't understand what is, they really don't know what's involved. So are you doing different kind of programs or, from an educational perspective?
Yeah, various. And once again, it's partnership. I think the problem is big enough, just as Rob mentioned, that you need lots of partners and you need lots of role players. So we've partnered with a couple of FSPs like a Liberty and a King Price, and the likes, and also the Western Cape government, where even public and private partnerships don't have a resource that can deliver at scale to people to understand where they how they can purchase a property, what that property looks like. Accessing a subsidy, for instance, we've got a platform that around 50,000 first-time buyers accessed last year, where we could educate them on the first home finance subsidy, which I think a big segment of the market is unaware of. And that's an awesome enabler, just like the rental product Rob mentioned, in terms of getting your foot into the door. And I did a quick calculation. I know a lot of financial advisors would, for instance, educate someone. So, I mean, there's a massive focus on the product side of the financial services sector, where people would give you the value of having a saving and having an investment. And we agree with that and we provide that education. But probably a property for someone in this lower bracket of the market is the best place to start, because they're in any case spending money on rent. So that's money that they'll never see again. So if they're putting that into an asset and building that towards their net worth, it's 100% gain. And if you look at a 30-year bond, there's always a little time left up to retirement to actually get into a position where your net worth makes sense. And it's stuff like that that we do to educate and guide someone with that in various programs. And like I said, the diagnostic there is also important, because we gauge where your property financial literacy is at, and then give you very basic or very advanced type of information and deliver that in a drip by drip process until we get to a place where you're now empowered to take over a title deed. It's we just had a project, for instance, in Koffiefontein in the Free State, where we helped Petra Diamond with asset transformation. And it was very interesting. I mean, they were donating vacant stands to some of their ex-employees that were just retrenched. And then a lot of them had bad credit scores. Now, transferring a property to someone that's under pressure by a creditor would not necessarily make sense. And it's those types of things that are important learnings and important tools that we provide, and we want to make sure that it's truly to the benefit of the end user consumer. So we really want to see that we can make a difference in the average Joe's life.
Excellent, that's great. So Rob, let's look from a developer's perspective. What specific strategies do you employ to ensure that these initiatives effectively stimulate local economies? Meaning that, do you have a cookie cutter approach to your developments? What are the facilities? Is there a little secret sauce that you've got in terms of when you put up these development that work? Is it location? What is it that, without giving away your secret sauce, but maybe just telling us, how you approach it because I mean, at the end of the day, we want to provide housing, but there's there's certain needs within that market sector.
Yeah. Thanks, Neil. And I wouldn't say we use a cookie cutter approach. I think every development is different. We've done about 104 developments in the last sort of 10 or 12 years, and most of them quite large. And because of the market that we're catering to, we have to go into areas where land price is affordable, where we can bring the product in at a price that isn't unaffordable to the market that we want to serve. So that gives you some limitations. It's unfortunate because obviously one of our strategies is that we also want to bring people closer to the workplace. When you look at where most large affordable operators started, it's in the CBDs. We actually took a different approach, and it's maybe a little bit contrarian, but a lot of people operating in the CBD will tell you that they are building in the CBD to bring people closer to the workplace. But when you actually analyze it, I mean, most of the workplace that was in the CBD has left the CBD and moved to into the suburbs. Like certainly in Joburg, that's obviously not the case in Cape Town. Cape Town have the reverse problem. If you want to try and do affordable housing in the Cape Town CBD, your property price is prohibitive, and government has to get involved. So from our point of view, we'd love to see much more involvement from provincial and national government to bring land prices, make land available. And I noticed yesterday that the Cape Town mayor on Instagram released some sites that were being released for affordable housing development, which is great. That's really what government, provincial, local, and national need to be doing. We would love to be much closer to the workplace. We can't always get that right. So we have to go into areas where the land is a little bit more affordable. But at the same time, we don't want it to be too remote. In fact, we won't do it if it's too remote. We like to go into areas where there are other services available. In the Cape Town area, let me use the Parklands and Sunningdale area as an example. Over the last 10 years, it's been an area where there's been quite a lot of infrastructure put in, public transport, the MyCity bus routes go right through there. There's retail, there's office, there's quite a lot of industrial going up in the area. In the Cape Town area, that's an area where we can buy land at a price that is reasonable, and we can still bring an affordable product online. So we look for areas where there's action happening. We don't want to plant our tenants or buyers 40 kilometers away. Francois, you mentioned a little bit earlier, Francois Verily used to have the 40 by 40 by 40 rule.
Yes.
So we don't want them to be 40 kilometers away in 40 square meter houses. So, we were contrarian in the Joburg and Pretoria area by not doing so much in the CBD. We did do some stuff there, and we have some exposure there, but we've tried to move people out into the suburbs. So you have to go into the more affordable suburbs, but you can put people where there are schools, where there are shops, where there are work opportunities, where there are public transport, where there's public transport access. So we look for all of those. And interestingly, in Namibia, Botswana, and Kenya, we're doing exactly the same. Our first development that we kicked off in Kenya is right adjacent to the Garden City Mall. Those of you that know Nairobi, it's a big precinct. There's work opportunities, there's school opportunities, there's retail opportunities. We've just hit the 8th story there. And our second development is also going up, and it's in a precinct where there's lots of other schooling and work opportunities available. So when we're doing our market study, we like to know that the growth potential is there, and normally that means there's other stuff going on. If you just planted 40 kilometers out and there's nothing going on around you, you've got a much lower chance of achieving growth, and it's much harder for your tenants or buyers to live their lives without having very significant transport costs.
Okay, good. Thanks for that, Rob. Kayise, from a finance perspective, I'm sure you shadowing Rob and his team, and you're looking in because you want to finance these guys. So, what are your tick boxes? What makes it work from a bank's perspective or your perspective, in that affordable space?
Yeah, it's again, I think everything. Some of the aspects Rob has touched on, because Let's just start with a simple, basic bank funding model. We've got liabilities, which are your deposits, okay? And once we have those deposits, we lend those out as we advance those as loans to the general public or entities out there. So the intention is always for us to be able to be responsible in how we provide funding out there to the market. Okay, and then there is a couple of risk factors which we take into account when we assess, let's say, a specific developer or a development as such. Taking into account that we've got liabilities at some point, which we need to get repay those should the depositors want their money back. So a couple of things. First is that development experience, and that talks to you just your delivery risk. And that is very critical, that the product is going to be developed within spec on time to the end user. The second aspect is your loan to cost. Technically, that shows the developer's equity contribution. And that obviously shows, let's say, his ability, let's say, to deliver the project or cover any cost overrun should there be those. So that is very critical. And it's commitment again, that shows commitments that there is going to be a level of ensuring that the project is delivered based on the fact that there is an element of skin in the game, as we call it, from a developer in this space. Then there is market risk. Market risk talks to a couple of things, but predominantly there is serviceability. Is there a market out there to service or repay or assist, let's say, in repayment of the specific loans which we provide to developers? Firstly, location. It's quite important as part of market. Are you providing a product in a location where it's needed? Is the product great or fitting for that specific location? Are there any amenities within that specific location? So will there be a buyer, technically in the nutshell, or a person wanting to rent? So that is very important that we analyze and mitigate specific development risk prior to, let's say, us providing funding. This question, I think, comes across quite a number of times. From an IHS, which are existing developers, it's much easier to obtain funding because there is track record they've shown. There is an element which is much more difficult, which is your new entrant. And those are the ones technically funding becomes a bit of a challenge. However, this is a collective view. What we encourage, again, is for developers to partner and then incubate the upcoming new entrants within the space. So, and once we get that collaborative effect between the two parties and ourselves, then some of the transactions are bankable as such. So those are this high level, let's say, criteria which we look at in terms of, let's say, funding developments.
Okay, great stuff.
Okay.
We always get this question, is there recording available? Absolutely. It runs onto the REI website. Very popular question. And because we get a lot of people that view it afterwards. So yes, in fact, it goes out to our newsletter tomorrow and it's on will be on our website probably by tomorrow lunchtime. So Rob, I just want to come back to you in relation to what Keyesa said, just with regards to the financing from a developer perspective. He's spoken from the bank. So maybe just share, you know, what are the challenges that you face as a developer in financing these affordable projects, you know, and how can they be overcome from your perspective? Because it's not easy, isn't it? I mean, there's challenges that come along the way and you don't get them all approved. So maybe just share a little bit on that.
I'll tell you what's interesting with that question, Neil, is how this market has become vanilla over the last 12 years, I would say, you know, particularly rental. Our first rental project that we tried to get funding for, term funding. So we went along to a bank and said, we're going to build 200 units. We're going to fill them with people in the affordable market. They're going to pay us rent. We're going to collect it. And then we're going to repay your bond at there. It was almost impossible. You know, Nedbank were leaders in this regard, where initially under Marnie Annandale in those days, they formed an affordable housing funding team that were strong and dominant, and still are, you know. So there was a focus and an understanding of the market. In the early days, banks didn't understand this market and they were reluctant to fund it. It was very, very difficult in those days to get a bond, a development bond for particularly a term rental project, and even for a sales project. That has changed dramatically, you know, particularly over the last sort of, I would say, 7 to 10 years, and now. And there was a concern in the banking environment and even in the investor environment. Like, there was a fear, you know, people aren't going to pay. How are you going to collect the money? And that is a legitimate fear, because what I will say is one of the reasons that it's much easier for us to get funding these days is because the banks like Nedbank, they know our operation. They know we've got 250 people in a property management business, and they know we put the right people in our properties and we collect our rent every month. And if you don't pay the rent, you're out. So, you know, we run at typically 98 to 100% occupancy. We collect, you know, 99 to 100% of our rent. But it's an operation. It's a big operation, and it's difficult. And I think the banks understand that. So, you know, we often are even selling a property with like 200 units or 300 units. And sometimes the banks will make it a condition that we continue to manage it, because I think that is a big risk for them, because there's not a lot of you know, experienced managers in the space. There are some now, and like I said to you, this market's growing. So there's some good examples, other private investors that are managing these portfolios well. But I would say, and as Kayiso said, from an IHS point of view, it's a lot easier for us to get funding. We are happy to share information and collaborate with new developers coming into the market. We don't hold our information tightly. We believe that the market needs to grow. Interestingly, in our Kenya fund, we actually have something which is called open source. You will all know Kessia Rist from the AUF. It's actually managed by Kessia and her team. And what that means is whenever, whatever we do, we put into a kind of a vault, whether it's designs, processes, property management processes, development processes, experiences, basically, we put into a vault that is actually accessible to the market. So, yeah, the Kenyan affordable housing market is where the South African affordable housing market was 10 years ago. There weren't a lot of players. There wasn't a lot of competition. There weren't enough people basically building affordable housing. And Kenya is there now. You know, we don't see people doing what we're doing. In fact, we're told it's going to be impossible to build affordable housing there, but it's not. We are building it. And that information and those designs and our experiences are actually available for new developers coming into the market to utilize and use. And this was actually one of the conditions of one of the local pension funds that came in as an investor into our fund, and we live by that. We're actually happy to share you know, our designs. Whether you're looking at an IHS development or a Century development or a Baldwin affordable development, you'll see they all look the same. Steve Brooks has said many times openly that he stole his design from us, and we don't mind it. You know, we don't mind that. You know, it's we think the market needs to be serviced, so it's kind of a good thing.
Absolutely, yeah. Interestingly, in 2018, I was actually the MC moderator for an affordable conference in Kenya, in Nairobi. And what I was actually really surprised in 2018 was, you know, I mean, they had more than 350, 400 people there. But what really surprised me is that the Minister of Housing arrived there. And I actually interviewed him on stage, and he was really open in terms of their approach. And it's interesting to see you guys. And in fact, Kessia Rist, you mentioned her as well, you know, is very active in that particular sector, was also there along with her team. And, you know, as you mentioned, they're doing a fantastic role. But what I realized they're definitely open for business. It's wonderful to see, you know, South African company like yourselves expand there successfully, which is great, and that you're open. Jacques, are you still there? Have you disappeared? I see you off picture at the moment. I see.
I'm still here. I don't know if it's my video feed. My apologies.
No problem. No problem. Okay, well, we'll talk to you. We'll talk to your ghost. So, so it does happen but I think, so Jacques, on a serious note, I think you've been involved now in areas like Mossel Bay, where you've been talking to local communities, and you've been involved like in the planning and development of affordable housing, from a developer's perspective, and engage with communities. Do you want to maybe just share some of those stories? Because I know, also with Mayor, your partner, that it's very interesting to see what's happening in different communities, as Rob mentioned, and really getting to understand them. But you've operated in slightly different environments. Do you want to maybe just share some of the stuff and in terms of what those needs of those communities are in terms of affordable housing? Now, we're talking about the individuals here as opposed to the developers, slightly different approach.
So we're lucky enough that we've got a couple of developments that we help from the Department of Housing for the Western Cape government. In Mossel Bay, you've just mentioned, there's a project like that. That project was actually built and stood empty because they did not know how to facilitate the marketing and getting the clients on board for a development like that. So one of the unique challenges. But from a consumer's perspective in the affordable market, I always say I don't think there's a lot different to someone that's in the affordable market or in the affluent market in terms of what their needs are. They want to know that the properties are secure, that there will be growth in that property, that there is, as Rob mentioned, it's close to the workspaces, and that there is good aftercare and education for their children. So it's critical that those types of developments from a consumer's perspective is located in spaces where those types of facilities and communal services are available. And very much the same challenges that everyone has is do I have a little bit of protection against power outages? Is there solar capabilities available in developments like that? And once you've got those basic type of needs met, it's actually a very much a growth market. That specific development, from the moment that the selling price to what the bank actually values that price went up with 100,000 rand as value to the end consumer. And that's just one of the ways showing on an end consumer's base how much value can be unlocked in this space. And it's lovely to hear Kanise saying that there's more opportunities to access funding. And it's even nicer to hear Rob inviting competitors, because from the data and the statistics, the market is actually growing. So even though there are role players, there's a need for a lot more to actually solve the housing crisis in that market.
Wonderful. Great. Thanks, Jacques. So Kayise, I mean, yesterday we saw the mayor of Johannesburg. I mean, that was quite a breakthrough at the IHS conference yesterday, and very positive. And look, he was put in a little bit of a corner. But interesting. But let's talk a little bit about public-private partnerships.
Oh,
How do we see the role of government policies evolving? Supposing, I mean, your role is still as financier, because we hear it all the time. Where's the man with the money? Where's the money? We need the money. If we don't have the money, we can't go ahead with the project. So maybe just talk about the public-private partnerships and role of government, and how could they facilitate it to make it a lot easier in terms of supporting these initiatives in the coming years.
Yeah, and in order for us to accelerate delivery of affordable housing, we need an effective collaboration between the public and the private sector. And just one of a couple of advantages to this collaboration will be increased efficiency and expertise. We know that the private sector is definitely efficient and employs great expertise in terms of delivery of, let's say, housing or affordable housing in this instance. On mega projects, on bigger projects, there will be a cost sharing and then a risk sharing. Government, for example, will provide, let's say, what is much more needed and much more costly in terms of external services, and developers will be able to take, let's say, those services into the boundaries of the specific developments which they are doing. So it's very critical. And again, with that collaboration, there will be an element of improved service delivery, ultimately. If the private sector delivers on what is required in terms of affordable housing, that in turn will increase the pace of a specific municipality with regards to rates and taxes and utilities. So it's quite important for that to happen. And government sets policies and drives legislations that we take. And we've seen, let's say, great collaboration in the past, which has happened. And for example, land availability agreement. We funded into developments or projects whereby local governments or provincial governments make land available to developers, and developers will obtain development rights and develop that specific land, which could have taken, let's say, government some time or years to be able to facilitate that development. So that collaboration where government owns land is quite important for them to be, for government to be able to make that land available. We've seen it again, the collaboration which accelerate housing. It's through the organization called SHRA, which is a social housing regulatory authority, which specifically deals with social housing, and the grant which they provide developers does provide a specific subsidy to an end user from a rental perspective. So you will find that rentals will range, and that caters to the much more the gap of the market which is not catered for. There will be a certain percentage that a specific number of rentals in a project must end between a range of about 1,500, let's say, to 3,500. So, and that is only because there is a collaboration between government, or there is a public-private partnership. Again, to expand on that, I think it has been touched on. It's the FLIS programs too, whereby there is financial subsidies to first-time buyers. Again, that is government and private institutions collaboration. So it's quite imperative for us to be able to share between ourselves. And it came out yesterday with the mayor, or the panel which we were speaking about, the inner city. But the biggest inhibitor, it's or not necessarily an inhibitor, the support which government can provide, let's say the private sector or even the communities, is it's how they deal with corruption and implementation of bylaws. That in itself, if we get that right, the facilitation and the programs which have been implemented by government should be easy for us as private sector to execute and enable developers to be able to deliver housing in the sector.
So, Rob, I'm going to ask you also just to comment on that, on the PPPs. And then also, I think, yesterday at your conference, I mean, one of the interesting thing was that, water was on the agenda, and which is quite interesting. And in fact, one of the questions I wanted to ask, we actually ran out of time. Many people remember who live in the Western Cape, 2017, we had day zero. And what I actually wanted to know, everybody spoke about the different solutions, which was great in terms of water. There's a water problem, it's identified, and then we had boreholes, and we were talking about the different options. I would really like to know, in Cape Town, we had really no rain in 2017, and I think they broke it down to something like 30 days before day zero. One of the questions I wanted to ask was, well, how many days day zero is it in Johannesburg? You know, how serious is it? I mean, is it 30 days? Is it 60 days? Is it 3 months? Is it a year? How really serious is it? I don't think anybody sort of articulated that. But just in context of that conversation, let's talk about the PPPs and the role that they need to play, certainly from a developer perspective.
Yeah, Neil. So I actually think, when it comes to PPPs, I think the biggest help that the government can give the private sector is to be there and to listen. Someone on that panel yesterday made the point that it would be great if employees of local authorities were in their offices between 8 and 5. I mean, that's a real problem. You talk to the housing minister in Kenya, being at that conference that you attended. In Kenya, when you go to a local authority, there are people there and they listen to you and you submit their plans and they give them back to you. It's not a long process. Unfortunately, in South Africa, it's been a really big issue. And one of the biggest costs in any development is time. And it's not unusual for us to have to wait 6 months or 12 months for a water design to be signed off or an electrical design to be signed off. Simple stuff like a services agreement. I can list, honestly, I don't have enough fingers where and we're not alone in this. It's a real issue.
Sure.
It's a local authority capacity issue. COVID definitely made it much, much worse because people started working from home. And I think some of them are still doing that. And it's a real problem, so that kind of collaboration, having the mayor at our function yesterday was just amazing because he was there and he was present and he was listening. And that's the kind of interaction that we need. It's not even like we're asking for anything. We just, that's the first thing. The first PPP for me is if local authorities can just get the job done. It's not, and it's not a difficult job. We tend to do a lot of the work, but if we don't waste 6 or 12 or 18 months on waiting for stuff like that, and I can tell you that Kaisa as a banker has experienced this pain because, it hurts them like it hurts us. That's the one thing. I agree with Kai that the SHA program is an unbelievable and successful example of a PPP. They did go through some leadership challenges for a while and stagnated for a little bit. We actually have a fund where we raised capital only to invest in social housing. It's a fantastic product. We've just kicked off a development. So some of you that live in the Cape Town area might have seen it on the main road of Somerset West, right in the middle of everything, 3 kilometers from Idiom Wine Estate. It's in a great area. There's jobs all around. It's a fantastic facility. There's a upmarket development right next door to us, a private school right next door to us. That when you see that scheme going up, it's got a creche, it's got all kinds of facilities in it, and we're going to have people living there that earn 1,500 rand a month household income, to 3,500 rand. I mean, it's a game changer. It's a great program. When we talk to people in other countries in Africa about that program, they think they can't believe how lucky we are. So it's hard. It's not easy. You need to really, really push through and get used to the process, but it works and it's fantastic. I think the other obvious one, which we will actually follow up on our session yesterday with the mayor, where we could work together, is this myriad of hijacked buildings in the Joburg CBD. All the people in the room yesterday and the people on that panel yesterday have the means and the facility to actually turn those hijacked buildings, which are currently a net cost to the city and are having a huge impact on valuations in the city. We have the ability to actually make a building available, move people from that hijacked building, which are in terrible conditions. I mean, we've seen bad fires in the last years. They really, I don't know if you've ever had the pleasure of walking into one of those buildings, but
yes, I have. Ponty, I've been up right to the top of Ponty.
and Ponty is quite an upmarket version of what you would
Yes,
see.
it is. It is. Yeah.
There are people living in squalor, and they're not living there for free. They're paying.
Yeah.
These people are paying between 2,000 and 5,000 rand a month to live behind a curtain hanging on a piece of rope with toilets that don't work. It's a hazard, and it's a terrible life. And the private sector, together with something like the Shah, has the ability to turn those buildings into operating affordable rental properties. And in that instance, the city of Joburg is earning money, paying
Yes.
rates and taxes. It's a game changer, and there's literally hundreds of those buildings in the Joburg CBD. So that we're going to have a follow up with the mayor. That is something that, as an industry, we can solve. There's enough of us out there now that are doing that kind of product and using private money. We had the second most senior person in the IFC in our office probably 2 months ago. And we've got a long relationship with the IFC. We've been working with them for 14 years. They've invested in many of our funds. They invested in our Kenya fund now. And we were talking to him about this problem. And he said to us, obviously Washington based, but travels the world. And he said, if you can get a collection of people together that includes government and the private sector to try and solve this problem, the IFC would be very keen to play a part in it, from a funding point of view.
Wow.
So that is it's a solvable problem that's been unsolved for, there's
Too long. Too long.
I was hearing from Angela who chaired that panel that there's a bad buildings program in the CBD.
Yeah.
And she wasn't around then, or she was around but not working in the mid-90s. There was also a bad buildings program, and they're the same buildings. How bad is that? Like 30 years later. So this is such a solvable problem, and I think that is low-hanging fruit as far as public-private partnerships go. The government doesn't really have the money, and private sector is not asking to be given these buildings. We will buy them, at the right price. To do a social housing development, you need to buy the land at 30,000 rand per opportunity. Sometimes it goes up as high as 70. But so if you're taking those buildings that you're able to empty and you're creating opportunities and you actually physically paying for that land, you've got an affordable rate that allows you the room to do the conversion at a price that still works for social housing. Everybody's winning, and then you move those people back into the building. You are going to have some issues because there are some illegal immigrants and people that won't qualify for social housing.
Sure.
But that's a solvable problem.
That's wonderful. It's so great to see the private initiative has got the will. The will is there from the private initiative, which is fantastic. And I think, I said to Kaisa, before we actually got live onto the show, I said, I hope it was somebody taped or recorded the mayor yesterday, because he said he's open, he's going to communicate. And Rob, you said, you're going to follow up. And we just hope that they have the wherewithal to follow up exactly what he said, because he was put in a little bit of a corner. But he did actually, without being in that corner, he admitted himself, yes, I'm open, talk to me, work with me. So, so I think that
he posted it on his Instagram feed this morning.
Wow. Oh, wow. So if that's not commitment, then I don't know what commitment is. Yes.
Yeah,
Carry on,
I think some of the housing issues are extremely complex, and so complex to even a government themselves. We been approached several times by parastatals and say, guys, we've got properties, for example, but which we can offload. We can even give those for free to Department of Human Settlements, to developers and whatsoever. But to take out or evict the illegal occupants is one of the most serious and challenging aspects in this development. So it's not as easy, and which I appreciate, because there is challenges. We've got, for example, Transnet. It's got a whole lot of hostels which are overpopulated, and nobody's paying for rates and taxes. Everybody's staying for free. And those, again, you can convert and change, but it's not an easy eviction process which you can think about. And you need to provide alternatives, obviously. You can't just evict people without, let's say, knowing where you're going to place them. So very complex. I think it's a problem. There is easy solutions, but some of those are very difficult. Yeah.
Absolutely. I
Yeah,
think it's
even
been
for
a
government.
fascinating discussion. Thank you very much, gentlemen. I can't believe where the time's gone. Jacques, what I'm going to ask you, I know we're still looking at your ghost screen. I hope you're still there in the background. Are you there, Jacques? Can you? Okay, wonderful.
Yeah, I'm still
No problem. So Jacques, what I'd like you to do, I'm going to ask everybody just to do like a minute wrap, a final. And I think Kayise mentioned quite an important thing, the FLISP, which is now called what's First Home Finance. I think it's been changed from FLISP to First, which was finance linked, whatever, I can't even remember all the, the TLAs and all the acronyms for all these different things. But so essentially, which is a government subsidy. But so maybe just touch, because you use FLISP, I know, a lot with the MyBond Fitness. So maybe in part of your wrap is just to do that. And then I will ask both Kayise and then Rob just to give your final wraps at the end in closing. So your final wrap there, including the FLISP there, please, Jacques.
So it was finance linked individual subsidy program. There was
Thank
FLISP.
you.
It was changed to First Home Finance last year, or early last year. The program is now delinked. It's become very easy to use. There is the will to give people the opportunity to access this subsidy. So for anyone earning between 3,500 to 22,000 Rand, the subsidy is available. You can even now purchase vacant land with the subsidy. There's opportunities to look at that retrospectively. And we've had a lot of success with the NHFC in getting people their subsidies, and we support anyone from an individual consumer basis to access that. And once you get that subsidy into play, a lot of property options becomes available for those first-time buyers. And those projects that was just mentioned in CBDs and whatever the case might be, could then potentially be funded by the state or help funded by the state without actually getting direct involved in terms of that. So definitely a very useful tool. There's other tools, as Rob has just mentioned. I think there is a big will and a drive to solve this crisis. And from our perspective, if there is anything or anyone that wants to partner or support that process, we're always available. And there's a lot of goodwill that we can piggyback from our other projects to help solve these problems. And I think, once again, thank you very much for this conversation. It was
Absolutely. Thank you.
And he said your contributions were very valuable.
Absolutely. Thank you. That's Jacques Tron of MyBond Fitness. Thank you very much, Jacques, for joining us. And then Kayise, maybe you can, your final parting shots, and then I'll ask Rob.
Yeah. From our side, it's affordable housing. It's a social impact asset class. We align in ensuring that the developers, we enable developers to, let's say, to deliver into the sector. It makes a massive difference in terms of providing, let's say, dignified dwelling to our people. I always say everybody else at some point shuts down, and where does he go? At home. So we need to provide a home which is safe, dignified, and sustainable. So definitely, however, while saying that, we will do this in a much more responsible way in ensuring that it's delivered without, let's say, risking depositors' funds unnecessarily.
Wonderful. That's Kayise Mashifani. He's the property executive at CIB Nedbank, and he's the money bags. He's the man you talk to get the money if you're a developer in this space. And then, of course, last but not least, Rob, your closing parting shots there, Rob.
Yeah, I think what I'll just add, and I think this whole conversation has been great. Now, I want to reiterate what Francois does is critically important. Something like the FLISP is heavily underutilized. So it's great that you're spending so much time doing it. This has huge impact on people. We do, because of our investor base, we do social impact studies, and the University of Cape Town does them for us on our funds and the impact on people who end up living in our units. And all of the same things come up all the time. There's a lot of jobs created. Firstly, if you build 1,000 units, they're going to be about 1,500 jobs for a year. Equally, to manage those units, you're going to create about 20 jobs over multiple years. When you talk to the tenants and, particularly women and single moms, issues like safety, convenience, security, health, these things all come up. When you move people think about the people living in those hijacked buildings in the CBD. They like bolted into those buildings by the PI Act, which is
Yes.
what Kai was referring to. And that's
Yes.
incredibly unsafe, incredibly unhealthy. They deserve better. And, this kind of development and the business that we're in is extremely rewarding. When you see people moving into, proper accommodation and living a proper life. So it's a great place to be. Keeps us going.
Wonderful. No, thank you, Rob. Wonderful. Rob Wessler, Managing Director of IHS. Just one last thing on the PI Act. It was quite a big debating point at the latest SAPOA. And I think it's definitely a piece of regulation, and I think we can take it forward in another webinar to discuss regulation, which is very restrictive for property owners in South Africa, because it should serve both sides. Got to serve the landlord, it's got to serve the tenant. And unfortunately, at the moment, I think it's just serving the government. I'm not quite sure who it's serving.
It's not even serving the government.
Yes,
because they've lost all that revenue. It's not serving anybody.
Doesn't serve anybody. So I think let's take that debate to the next level. I think that's another point that we can discuss in future. Gentlemen, I want to thank you all very much. Rob Wessler, Kayise Mashufani, and then, of course, Jacques Tron, thank you very much. Your insights and expertise really added tremendous value. I can tell you in this session, I know our attendees benefited greatly from your knowledge. Just before we close, I just want to remind our audience of our next webinar. There's not a webinar next Thursday on the 7th of November because we are running a 3-day virtual masterclass in student accommodation. And we've got a property coach, Rita van Rooyen. She's an investor. She's the owner of my student house, also a property coach and the author of only book on student accommodation. And that's going to be Tuesdays, the 5th, 6th, and 7th. That's from 6 to 8. And there is a fee. It's 2497, which includes a 3-day masterclass, a course manual, one-on-one with her, and a copy of a book called Creating Wealth in Student Accommodation, only in South Africa, not anywhere else. Includes a bus tour in Cape Town and Johannesburg. Cape Town will be this year, Johannesburg next year. So please sign up. There is a link, I think, to drop a link. Or you can go to the REI website. So once again, I just want to thank our team here, the team Affordable Housing. Magnificent, wonderful conference yesterday. Great discussion today. And so, yeah, if you want to see any of the recordings, you just go to the REI website, and those that have obviously signed up for this, we will send it through to you directly. So thank you once again, everybody. It was wonderful having you all here. And from Rob, Kayise, and Jacques, take care and goodbye until not next Thursday, the Thursday after, that's the 14th. Neil Peterson, Kayise, Rob, and Jacques signing out. Thank you very much, everybody. Thank you.
Cheers, everybody.
Cheers.